And the question of the day, is the market still going to correct 10% in the next 7 days at this point? And I will reveal the answer to that question at the very end of this video. And for now, I'd like to do something exciting. I'd like to do like a little exercise, which I think is going to be very helpful to everybody. So I'm going to show you a chart right now. And I'm going to show you the importance chart in just a second. But the main purpose of this exercise, guys, is to help you identify the psychology behind shorting stocks. So let me ask you a simple question. When you look at this chart right here, let's not even worry about what stock it is. For just a moment, I just want you to take a look at these charts. So there it is. $1,815, and from there it just keeps going higher and higher and higher, okay, all the way to $1,884. Maybe you can actually guess what stock it is. The idea now is looking at this chart right here at this point of $1,884. Take a closer look. Are you a buyer or a seller? Do you want to buy this stock? Just forget about options for a second. Do you want to buy this stock? Do you want to sell this stock? And by the way, I will give you a time on this. Okay, so this was at 11 o'clock in the morning, 11 a.m. Through 9 a.m. the next morning. Okay, so less than one trading day here. Okay, 11 a.m. to 9 a.m. the following day. Do you want to buy or sell this stock? So hopefully you've answered that question. By now, I'm going to take you to the next chart. Okay. If you would have bought this stock, you would have been probably in tears. You would have probably been screaming, man, this market is manipulated. This market, every time, it looks like it's going higher and I'm getting in it. Geez, the stock drops. And every time it drops and I buy the dip, it drops even more. So guys, let me give you a couple of examples here so you would never have to deal with these type of situations again. It's actually quite simple, but psychologically it's a little bit tough to figure out at times. So actually this is an example of BKNG, right? And this is a chart from today, Thursday. The stock opened at $1,884 in the morning, around 10 o'clock. You could have shorted it. And then it dropped all the way to $1,820. Again, what is the time frame on this? It's from 10 o'clock in the morning to 4 p.m. You could have bought options for $8 in the morning, and you could have sold them for 24 bucks later, almost $27 later in the day. Okay, now you wouldn't be thinking that that is what was coming by looking at this chart, or at least. Actually, if you said yes, you would be buying the stock here, observing this chart, it would be nice if you left a comment and just be truthful about it. Now, if your answer was truly, oh no, I would have definitely shorted this thing, then, type an honest answer in the comments. But the purpose of this exercise is psychologically, when you see a chart like this, you don't naturally think about shorting it. You naturally think about, oh yeah, looks like this thing it's a nice uptrend, looks like this thing is just about to go higher. Now, so far, I've identified the time frames, right? So this is a daily chart, and this is a daily chart from today, August the 16th. All right, nice and easy trade. Now, we've talked about BKNG for the last week here on this channel after it dropped $200. And if you haven't watched that video stating the reasons why, you can probably see a link at the end of this video and check it out. But the question is, how do you know these things, okay? And how do you actually become more confident, identify these opportunities before they take place? So to give you an answer to that question, I am a strong opponent about looking at the charts of multiple time frames. So far I've shown you the charts that are intraday, 1 minute, 1 day. So to understand a better idea, to get a better understanding, a better picture, that's going to help you stay more confident, okay, go on a daily chart, right, and take a look at what BKNG was doing. And if you watch that video with a price prediction of a $200 drop, so I've identified those two black bearish candles. I've talked about diminishing RSI. I've talked that the stock was going to sell off on huge volume, which it did. and I've talked about it closing the gap right here. Now, at this point, the situation has gotten quite out of control for BKNG because it keeps falling and falling. Now, this observation, okay, was key. A lot of people that watched the video about the $200 drop prediction, I think they focused too much on that. So the main point of that video, guys, was this. I was clearly going through the chart of BKNG, trying to explain that before this move here happened, the main point in the video was to point out to you that this is a stock that has a high probability of consecutive moves lower. So, and I was pointing to this part of the chart right here, which was showing 1, 2, 3, 4, 5, 6 consecutive days lower. I specifically made a point in that video saying that once the stock was going to drop by $200, okay, I specifically was going for an explanation how I don't like to buy options before the day before earnings because the options are typically overpriced. And so, you know, a lot of BKNG options before earnings, they're like 50, 60 bucks. Okay, you can buy for 50, 60, sell it the next day for 120. That's only doubling your money. I like to seek out opportunities that produce 400, 500, sometimes 600 plus percentage gains within a very short time frame, typically, you know, 48, 72 hours, you know, week time frame. The main observation in that video, the main point was once BKNG was going to drop, it had a high probability of making multiple consecutive moves lower. If you watched the last few videos, I've pointed out the multiple alerts we have sent out to short BKNG again and again and again and again. Now, all of a sudden, it bottoms out right here yesterday. If you take a look at this chart, the first daily chart right here, it was at 1,815 bucks. That's where it bottoms. So at the time, your 1850 puts were worth 50 bucks. In the alert we sent, you were buying them for 650. So at that point, that was an 800% gain in less than 72 hours. So the reason this was a good time to get out, because if you watch the earnings report, a lot of times I talk about the importance of observing the pre-market and after-market price action in stocks. So this was not a precise number, but it was very close to a number. BKNG actually hit after-market when it reported earnings. Do you see this big drop when it dropped, you know, from here all the way to here? Well, you can't actually see it on this chart, but pre-market on a chart that would be similar to this, it actually dropped all the way to 1807. And you can probably look at your brokerage account and pull up the charts and you can see that. So once that a low of 1807 was set, the stock has rallied, right, all the way back to 1950, which presented a good opportunity to short. And you can see it here on this chart right here is indeed, it was a great opportunity to short. So it drops pre-market, then rallies all the way to 1950. We're sending alerts to short that thing. Okay, so the whole point here is once that trend reversal took place and created that gap lower, your strategy should be every time BKNG goes higher, you want to short it. If you would have used that strategy every day, you would have had an amazing opportunity to catch this multiple consecutive moves if you were trading it daily, but better yet, you could have just stayed in the trade for 4 days, right? So once that reversal started taking place, okay, you could have observed that it actually took place on somewhat lower volume than the move lower. So look, the huge sell-off was on a huge volume right here. Last time, actually on this chart, there's not even a sell-off volume like this at all. If we look at the weekly chart, a sell-off volume like that was very, very long time ago. So there were plenty of bearish signs that were still developing here, right? So at this point, the stock is in a downtrend, and I can tell you, looking into the future, there is a high probability that this blue line is going to cross this orange line, and a death cross will be created. Now, why would that be important? Because after hitting this multiple top for many, many months in a row over the course of the last 6 months, the stock is finally creating this very bearish crossover situation. And that makes me even more bearish in the stock. So you think that after this $280 drop, it may be too low, and maybe it's time for some buyers to come in and buy the dip. But the reality, those buyers that did come in and bought the dip, they didn't buy the true dip. Because clearly, if we go back and we take a look at the situation, so here they are coming in and they're buying the dip at 18.15. They take the stock all the way to 18.84. Okay, the stock to me is still in a huge downtrend with a trend reversal that just took place literally a week ago. To me, the strategy is quite simple. What you want to do is every time the stock runs higher, you want to short it. And so if you would have done it this morning, the stock was right here, this big purple dot, right? It was at 1884. You would have shorted it. The stock by the end of the day was closer to this 1820 range. Another 450% return. Nice and easy. Okay, the stock could go much lower from here. As a matter of fact, if you ask me how low, but actually before I show you this, so look, this was the representation of the accumulation distribution in the stock yesterday. See how tiny that was? So after the huge sell-off, the accumulation distribution drops to a very low level. It bounces a little bit, but this bounce is nothing in relation to this huge sell-off. So it reaches this, short-term bounce that represented a great opportunity to short it, and you would have made a killing yet again on the options of BKNG today. Now, where does the stock go from here? Well, I think the stock is going to have a pretty hard time rebounding from here. It certainly is going to have a very hard time closing this gap. It's trading under the 50-day moving average and the 200-day moving average. So if the stock makes an effort to run back up to $1,900, that's definitely a very good opportunity to short it again, especially if it does that on low volume. But if we take a look at a longer time frame, right, here's what we see. It actually has a chance to fall all the way to $1,530, and my time frame on that would be November. Well, why do I say that? Because, again, this trend reversal is very significant, right? The stock has been trending for a long time in an upward trend, and this reversal is sort of in the beginning, early stage to me. On the weekly chart, which is a longer time frame chart is not going to represent, your fast short-term moves, as I was showing you between yesterday when it moved roughly $70 higher, and today they raised all of those gains basically in one move. Longer time frame chart is actually going to give you a good idea where the stock is going to be headed in in the next couple of months. So I'm not saying it's going to be at $1,530 next week. What I am saying is by November there's a high probability the stock can easily pull to all the way to $1,600 or even $1,530. Now there's many reasons for that, but there's clearly some things on the chart that are pointing to that. Okay, it's fallen in a much higher volume. There's a MACD bearish crossover. The accumulation looks like there's still plenty of people can come in and sell the stock. Now, if we take a look at the stocks that have been falling, look, if it drops to $1,530, the stock is only going to be 25-30% roughly of its all-time high. We have stocks that drop 20-30%, in some sectors now, literally within days. I mean, we have stocks that are dropping 20% in a week. So if BKNG, I know it seems like big numbers because of the high price of the stock numerically, right? But in reality, if it dropped all the way to $1,530, that wouldn't be a huge percentage drop even from here. Okay, so if you take that into consideration, I think there's a high probability. It does not mean that the stock is going to continue dropping every day, however, so expect some natural, run-ups higher, but use those as an opportunity to short the stock. Okay, so I know it's kind of lengthy explanation, but here's the exercise I want you to do, okay, because I certainly don't want you to just listen to some videos on this channel because you're going to get that information at a different time. You may be reviewing those videos a lot later after the main action is taking place with the stock. So what I don't want you guys to do, if you're following this channel, I don't want you to just look at the video and just run into your trading account the next day and put a trade in. Okay, what I want you to do is I want you to take yourself through this psychological process right here. So very basic psychology of shorting stocks. Shorting stocks is exactly the opposite of buying the dips. Okay, so forget about trading options for 5 seconds and imagine this. If you own 1,000 shares of XYZ stock, pretend that you know for a fact that XYZ stock was going to drop in the near future. So if XYZ stock went higher today or tomorrow, the question is this. Because now you're watching the stock is actually going higher, and in your mind you've determined that it's going to drop, what do? Do you all of a sudden start buying the stock? Or do you actually come in and you take profits here because you've already determined that in the near future the stock is going to drop? Well, I know the answer seems quite obvious to that question, but once you actually trade in, guys, with a live account, you would be surprised that actually 95% of traders do exactly the opposite. They calculate their trade to go a certain way, but the moment the trade starts going against them, they start questioning their decisions, they start doubting their decisions, and instead of staying short the stock or staying with their put option position, they actually start buying it. Now, write this down if you have to and just ask yourself this question, right, before you actually buy the put options, okay? Clearly, I've shown you an example right now of how to identify when it's actually a good time to, get into a short position. You certainly don't want to be doing that when the stock is hitting at low levels that were set in the short-term time frame. A good example I was giving you, observe the pre-market and after-market levels. So you would have known that once it was going to get here to this 1815 level, right, which would be the case for the same level to watch out for tomorrow, right? Once it gets to 1815, you're probably going to see a good fight, right, because it's close. I mean, it's trading what it closed at 1824, so $9 lower, and it's at that range where it set a low yesterday. So it's probably going to revisit that low. The question is what happens once it's going to get here. Is it going to break through that on higher volume again and it's going to go lower? In that case, I think it's going to drop way below 1800 tomorrow. Or it's going to find some support here. In that case, you may see another run up. You may see some buyers coming in here and actually are buying the dip at that level. So you didn't want to be shorting that at these levels right here. Okay, you wanted for the stock to actually run up. Now, the predetermined conditions for that would be for you to actually go through a longer time chart and actually understand that, look, this stock is no longer in this huge uptrend as we've seen on this weekly chart. Okay, this was a nice uptrend right here. Now we have a reversal of the trend. And so in the reversal of this trend, now the trend is a downward trend. And in a downward trend, when you see diminishing prospects for the stock as far as its future earnings growth, as far as its future sales growth, as far as the overall negative sentiment on the sector and so on, strong dollar is definitely hurting Priceline shares. There's no doubt about it. So you got just too many negative things going. That's why you see these consecutive days on huge volume. There's a lot of institutional investors that are unloading their positions right now. Okay, so this trend is not likely to change or reverse over the course of the next 2 or 3 months. Therefore, the longer time frame prediction of $1,530 by November. But in the meantime, right, you don't want to just go ahead and short the stock right here without asking yourself this question. Okay, if you owned 1,000 shares of Priceline, okay, tomorrow, if the stock was to go higher by $50. Would you be willing to sell your shares or would you be buying more? So if you answer that, you would be willing to sell the shares at that price, then that would be a good time to actually enter your position. I know it sounds simple and crazy, but trust me, asking yourself this very question is going to help you, Now, in reality, if you owned 1,000 shares and the price was to start dropping tomorrow and dropping below that level of $1,815, $1,807, then you may be asking yourself a question, well, hold on, maybe it is going to drop another, $50 or $60 from here. So clearly it's breaking that support level that was established yesterday, that was established the day after it announced earnings. So maybe I'm better off unloading shares. And the key thing to observe there is the volume. If it's breaking for that key support level on huge volume, then you definitely don't want to be waiting for a bounce higher to be getting rid of the shares. You want to sell them right there and then, because if you technically love the stock so much, then you will be able to buy it much lower, at a much lower level, maybe 1750, maybe 1720. Okay, so I hope this question, if you actually use it, it's going to give you a good guideline of when to get into some of these positions and when to get out. Okay, so let's do another exercise real quick. Here's the stock of Chipotle. So the same question, looking at this chart, do you want to buy this stock? All right, so here's a nice uptrend, 481, start keeps going higher. Nice, look at all these green bars. You gotta love it. Everything is just green. Okay, so do you want to buy this stock? And here's what happens next. Whoa, didn't see that coming, did you? Look, when there's so many people are bullish on a certain thing, look, at some point, people are going to start taking profits, and that's exactly what happened. Now, I'll be honest with you, I did not nail this alert perfectly, because when the stock started rocketing, when the market was falling yesterday, I sent out an alert when it actually was trading about this 513, 514, represented by this yellow dot right here, right? My trade was based on many different criteria, but when I started observing this bearish candle, I'm like, okay, the market is falling, okay? This stock is going on some news which are like total BS to me. One of the analysts that was bearish just decided to raise his price target to 600. So it's nothing that the company did that was phenomenal. It's not, it wasn't anything foundational, like, its sales went up or its earnings per share went up, or, it's found a way how to decrease the food costs. As a matter of fact, the main bearish case for this stock is because of all the tariffs and, all the, farming economy being hurt right now. It's actually going to increase the cost for Chipotle, and if the costs are going up and the costs of labor, looks like they may be actually going up, or at least if they stay the same, it's going to actually cut into the profit margins, which are not very high to begin with already. Okay, and the stock on top of everything trades at like a huge multiple in relation to, it trades like the multiple of a high tech stock, and it's a restaurant stock. So, there's many reasons to actually be bearish on the stock, but from the standpoint of trading short term, right, let me just help you make a quick decision. So let me ask you the next question, by the way. Do you want to buy this dip, right? So yesterday, the stock broke out of this nice range. It hit today a high of 530, and it dropped back to this range. So it looks like maybe there is just some kind of support here. I mean, what do you think? Should you buy this dip? In order to answer this question, guys, again, look at the multiple chart time frames and just be a little bit of a devil's advocate with yourself. So what would you be doing if you bought the stock in February 2018? So let's pull up the weekly chart for CMG. Let's take a look here. All right, February 2018, the stock fell to a long-time low of 248. Since then, in the last 6 months, the stock rocketed to 300. I mean, it rocketed $50 here on the change of a CEO. Then finally, the news was not just as bad as everybody was expected, so it moved even higher. Okay, and so it continued this trend higher. They kept buying those couple of dips right here. Now look, finally we have this confirmation of a possible trend reversal. And there's a couple of things that are pointing out to that, right? Maybe MACD is about to turn the other way as well. We're seeing some bigger sell volumes once the dips happen. Like, there's a few things here that are making me think that the trend reversal is near. So the question is this though, right? If you bought that stock at 248 in February, and now today was trading at 528, do you think maybe you would take some profits? I mean, would that idea cross your mind? Just be honest. I mean, I know some people will say, no, it's going to the moon. That's the next Bitcoin, Chipotle Mexican Grill, right? I mean, there's people like that. I mean, it is fine. I mean, it's okay, because once the stock is on the roll, a lot of them do go much higher, right? So there is some truth in that. if they got some momentum, and clearly stock had a lot of momentum from 248 all the way to 528. But the point of this discussion is, look, the market is at all-time highs, and if you bought the stock at 248 and now it's at 528, you would be more than doubling your money. Most of the institutional investors would be taking profits right here. And if you look at these charts today, the price action, isn't that weird that the stock, just stops out at 530 and then drops like a rock? Okay, well, the market, the reason I say it's weird, the market moved up 400 points today, right? So wouldn't that be odd for a stock to drop 30 bucks when the rest of the market is going higher? Well, there is a saying for institutional investors, sell into the strength. That's when they like to take profits, and clearly they don't think that the stock has much further room to run. So, and a lot of them did buy the stock at these levels right here, so it makes sense that they want to come in and start taking some profits. All right, so again, you want to be short in the stocks, right? In other words, if the stock drops another 30, 40 bucks over the course of the next few weeks, you're probably going to like, oh, geez, no, that thing is definitely falling. Well, guys, okay, it may not be as good of an idea to short it at that point, because at that point, it would have come off $70, $80 from this high of 530 today, or 528, right? So you want to short the stocks at the high end of the range. So the purpose of me showing you these couple of charts when BKNG was rocketing higher by 70 bucks, typically, psychologically, you want to do exactly the opposite. You want to like, oh my God, they're buying the dip. I need to buy this. And so as soon as you do, guess what's going to happen? The stock is going to reverse. Now, I promise you, for some of the alert subscribers, guys, I know it's difficult, okay? But the position, the alert that was sent out yesterday to short CMG right here at 513, 514 range, we're suggesting buying this $500 puts, okay? Immediately, position was making money on this short pullback, okay? But let's say you stayed in it. Let's say you missed that moment, which you would have not missed it if you've been for some of our courses, right? The chart course, how to generate trading ideas, the 13 market moves. You would have known to set up a limit order right here, and you would have actually locked in some of the profits, because they accumulated really fast. Within 20 minutes, you could have had 100% returns on some of these put options right here, right? And so let's say you sold half of your position, you kept half, and it went completely against you, right? If you stayed with the position, you would have still made money. And chances are, if it continues dropping tomorrow, another 10, 20 bucks, guys, these options right here, this 500 puts, could make a ton of money tomorrow on Friday. Okay, but the point is this, okay? When you see this, the stock is trading at a higher range, okay? Especially if it is preceded by a 50 or 100% run-up short-term in the stock. In other words, that 50 or 100% run-up does not happen over 5 or 10 years. It happens over 5 months. Like, that's a big deal. The stock is going to lose its momentum at some point. We'll talk about a lot of those things in the chart course. If you're taking our chart course, you definitely click the links in the description and sign up and take the course. I promise you, you will learn some things that will definitely help you become a better trader. All right, so moving forward, the answer is you would be taking profits at 528. Maybe not as an individual investor, but as an institutional investor, you would have no choice but to lock in gains of 100%. Let's take a look at Amazon, okay? So again, the point I'm trying to illustrate here is do not enter your short positions at the lower trading range of the day. Short stocks on the bounce. So the example we're given here is Amazon. The yellow dots are the representations of the times when we actually send out an alert to short Amazon. Most of them were recommending buying the Amazon puts of $1,900 strike and $1,860 strike. I've actually had some guys that were like, hey man, we watched your video and geez, we bought some puts when Amazon was dropping. See, psychologically, that is what you want to do. You want to buy puts when you see this. When you see this huge drop from 1915 all the way to 1869, guess where a lot of you would have probably been opening your positions? Right here at 1870, 1869. Okay, that's where you would have been tempted, because at that point, the fact that the stock was going to drop much lower was absolutely undeniable to you when you were looking at this chart. See, you don't make money, or you can't technically make money because it could have still moved lower, but you have to understand one very easy thing that I call a DTR, or a daily trading range. If you study the stocks and the history and you understand how the charts works, it's going to be very simple for you to understand and identify the historic DTR, or the daily trading range of the stock. In other words, in case of Amazon, its average DTR is roughly 40-50 bucks. In other words, Amazon can start the day higher by 20 and then drop by 30. Okay, so that's a move of $50 net move, right? So when it's moving 50 bucks, it is time to get started a little bit cautious. You know, technically, if you would have been getting in at these levels, your profits would have been running to the extent of 300-400% right here, depending on when you were actually pulling the trigger of entering these positions, right? But if you were entering this higher end of the trading range, those gains would have been very realistic. And if you follow our system, you would have actually been definitely out of half of your position, if not all of your position, by the time that move actually taken place. Then if you use the suggestion that I'm trying to describe in this video, okay, do not, okay, after the stock makes, you know, $50, $60 move, that is not your perfect time to short. So a better time to short would have been wait to when the stock actually bounces back. Now, sometimes what's going to happen is you're not going to be able to identify by how much higher the stock is actually going to bounce. So what you will need to do is you're going to need to use some of the strategies which we recommend. And one of them is not jumping into the position all at once. So no matter how great of a trader you are, you're never going to be able to identify the top perfectly. Now, occasionally it's going to happen, okay? And that's wonderful. But down to a point each and every time on each and every trade, I think it's humanly impossible to do that every single time. But to eliminate heavy losses, if you try to nail the top, you would open a smaller size position and you will build on it just in case the stock keeps going higher. And that is how, as long as your calculations on the chart are correct and you have multiple reasons to believe that the stock will drop, then that strategy proves to be a great strategy. Okay, this morning when the stock bounced it higher, if your calculations were that you're short Amazon, that would have been an appropriate time to open your short positions, and that's when we texted the alert out to buy actually 1,890 puts. As you can see, if you did that, you would have had a small gain. Okay, but I still think the stock could run much lower tomorrow. Okay, so the question is, why would it be even making sense to anybody to be shorting Amazon? Well, besides looking at the chart, let me give you the same reason that I have just given you on Chipotle Mexican Grill. Okay, let me ask you this. If you believed recently that the stock is actually going to an all-time high, let's say of $2,000 or $2,100, let's say if you were buying it right here at 1,926 bucks, and today the stock is trading at 1,886. Would you be selling the stock? Chances are no, because you're sitting at a $40, $50 loss on the stock. We're just talking about not options, but just stocks. So you would be like, oh no, Amazon is a great stock. I'm going to wait till it bounces. Okay, so, but guess why it's not bouncing higher? The answer is quite simple. Okay, guess what people were doing right here in April when it was at 1,350 bucks. Well, some institutional investors were buying it here. And right now, the stock is an all-time high. The market is pretty much at an all-time high. By definition, some institutional investors that bought the stock here, they're going to come in and they're going to sell it here. And this is why the stock has such a hard time breaking out from here. Okay, and you can actually see I put another big purple dot right here pointing to this huge volume, right? It doesn't seem like a huge move, but it's definitely huge volume. When I see this, typically there is going to be a follow-through on this move lower, especially when it is confirmed with diminishing RSI on the MACD, and the accumulation distribution for the first time is actually intensifying. It looks like if it's going to take this low, geez, Amazon could be for a big surprise It can take a lot of investors for a big surprise. I mean, what do you think the people that were buying it at 1926 are going to do if by Monday Amazon trades under 1800, or let's say it's 1777 bucks? Do you think they're still going to hold on to that stock? No, at that point they're going to get out, which could propel the stock to maybe hit 1750 bucks, which looks to me, if we look at the previous lows, maybe 1735. We could see there by next week. Okay, so the question to ask here: would you sell Amazon for 1900 bucks if you bought it for 1350? Some of you may say, nah, but for an institutional investor, that's a huge gain. The question is, would you be selling Amazon shares for 1900 if you bought them for 1600? I think most of the people would say, yeah, I'd take my profits here. And the answer would be pretty much definitely yes to majority of the people. 99%. If you bought it for 300, you'd probably want to sell it, because at this point your probability of it going from 1900, let's say, to 2000 or 2100 is just not as great as the probability of the stock pulling much lower from here. And so why wait for an extra $100 in gains when you can lock the gains right now at 1900 bucks before the stock can potentially fall all the way back to 1700? So do it now, and I think that's what a lot of people are doing. Now, as promised in the beginning of the video, do I still think the market will drop 10% in the next 7 days? I'm just going to show you this one chart to answer this question. And the chart is the chart of the VIX. So yesterday the market drops by 300. What happens to the VIX? Remember this cup and handle I was showing, which was a very bullish move. Yeah, it drops it, but it holds the level really good. So when the market drops yesterday by 300 points, okay, VIX spikes all the way to 16.86, which is a huge percentage increase from the 13, 14 handle. Okay, now today the market rises 400 points. Well, when VIX opened up, it was at 14, and this is where it sort of finished yesterday at 14.5, right? So with a huge rise that we had, the most notable thing to me out of this chart is the fact how well the VIX actually held this level of 13 and actually closed at 13.45. So considering the huge rise and the overall positiveness of the market today, wouldn't you think, and I got the question mark here, that the VIX should have dropped significant? Shouldn't this drop be equal percentage-wise to the drop of the rise in the VIX yesterday when it was dropping by 300 points? So to me, the fact that the VIX is actually hanging and holding this, what appears to me as a short-term resistance level around 13, I think it's going to go higher from here. And combining all the things, okay, I will take you through, actually, I'll show you another chart. So high probability of a gap down tomorrow. Focus on the tech sector. Okay, why? Well, I've came up over the last almost 13 years, 12, 13 years, with this 13 market moves formula. And so these numbers may not mean anything to you, but I keep track of them every day. And this is actually a chart of NASDAQ. And I do the same thing on an S&P. So the market moves, I break down to them in 13 moves, which gives me an idea, because I observed the sequences of what market move is actually going to take place next. And so by observing these sequences, I've identified that some of them have a higher probability than some of the other ones. So in this case, we have 3, 11, 7, 4, 6. The next probability that tomorrow is actually going to be another 3-day. So if you look at this chart, the 3 is when the market goes down and then continues to sell off throughout the day. I think there is a 70% probability of a 3 or a 4. Now the difference between 3 and 4 is on the 4 your market is going to gap down, it's going to go lower, and by the end of the day it's actually going to start bouncing. So expect a move that's going to resemble this move right here, or it's going to resemble this move right here. Okay, with that, I want to thank you guys for watching this video. I know it's been lengthy, but I hope that you've learned something good. And if you'd like to learn more, I would definitely recommend taking the chart course. Simply click the links in the description and take advantage of some of the materials and courses we have recorded that will definitely help you become a better trader. Thanks again, and I'll catch you in the next video.